And we have some breaking news now. We have housing starts numbers out, and they actually are surprised to the upside. 1,297. It was projected. The survey median was at 1,250, so 1,297. And also but they revised down a bit on the prior year because October was quite robust, and November comes in actually better than expected. Now they backed off a little bit in October. This was mainly in October, multifamily dwellings, apartments, and things like that. So this is a robust number, 1,297, better than what the economists had predicted. Also, the starts month over month increased by 3.3%. It was projected they would actually go down by 3.1%. So better numbers than what we expected on the housing.
And this just goes to show the city surprise index yet again rises. So it's interesting to note that a lot of these economic indicators have been coming out stronger than economists have been predicting.
And since we have economic indicators, let's get a professional, an expert on this. For a reaction, let's go to Mark Zandi. He's Moody's Analytics chief economist from Westchester, Pennsylvania. So Mark, you are the expert on this. These look like pretty encouraging numbers. How do you take them?
Yeah, they're good. I think the underlying rate of housing starts is around 1.25, 1.3 million, which is a steady improvement. The bottom, and believe it or not, if you go back to the bottom back in 2009, 2010, we were at 600,000 starts. So this is more than double that. But I think our benchmark should be higher. I mean, the underlying rate of demand for new housing starts is probably between 1.5 and 1.6 million. So we still have more to go to get back to something you would consider to be more typical.
Mark, we've been talking a lot about the GOP tax plan, which is poised to pass at some point within the next few days, if not hours. I'm just wondering, we've been talking about what the potential impact might be on housing prices and housing demand. Where do you line up on this?
It'll be a negative for house prices, particularly in the Northeast, parts of Florida, some urban centers in the Midwest like Chicago comes to mind, California. I mean, these are areas where homeowners rely on the mortgage interest deduction. They rely on deductions for property taxes. So house prices will weaken. I don't think that the hit to house prices will result in price declines. Certainly not nationwide, but it certainly will slow price growth next year and in 2019 as the markets adjust. So it'll be a negative.